So a few days ago, I checked my portfolio and red was everywhere. The Dow was down well over 1,000 points. Tech stocks were melting, and the financial news outlets, well, they were screaming uncertainty. But then I watched Trump in a live interview blaming the Fed, saying the only way to save the economy right now is to slash interest rates fast. And that's when it hit me. What if this isn't a meltdown? It's actually a setup. What if Trump is shaking the market to force the Fed's hand? So, just before we take a deep dive into this subject, it's imperative that you hit that like button and subscribe so that you get notified the minute we produce another game changing video that affects your finances. I promise you'll appreciate it. So buckle up and let's plunge straight in. So let's start with the basics. The Federal Reserve sets interest rates to control inflation and to stimulate or slow the economy. When rates go up, borrowing gets expensive. Stock markets often drop. When rates go down, borrowing gets cheaper. So stocks, housing, crypto, everything pumps. Now, here's the key. The Fed watches market signals. If Wall Street panics, the Fed tends to pivot. It happened in 2018 when markets crashed. The Fed reversed the course. In 2020, the COVID crash, the Fed drops rates to zero within weeks. So, if you're a powerful influencer, say like a president, you don't need to ask the Fed to cut rates. You just need to scare the markets enough that they do it themselves. So, just look at what's happening. Trump gives an interview suggesting the US economy is headed for collapse. He hints that the only solution is cutting interest rates big time. Markets react with fear, uncertainty, and sell offs. And who does this pressure exactly? You guessed it, Jerome Powell and the Fed. Now, the Fed doesn't operate in a vacuum. They respond to investor sentiment, Wall Street panic, and political pressure, even if they won't admit it. So, if Trump wanted to see rates cut to pump up real estate, stocks, and consumer confidence, well, he might not need to wait. He just needs to create enough financial chaos to make the Fed blink. Now, this is where things get real. Trump has always been about real estate, debt, and growth through leverage. Lower interest rates, what that does is it increases home values, which is perfect for developers. It lowers debt payments, which is good for business owners and consumers. And it pumps up the stock market, which in turn boosts confidence. Now, here's the kicker. According to CNBC, Trump has said in multiple recent interviews that the US is sitting on a bubble and the Fed needs to act fast before the crash. The translation: cut rates now or I'll push the markets until you do. So while it might look like chaos, it could very well be economic theatre with a purpose. You're forcing the Fed to cut rates earlier than planned. So, next up, if this is the plan, who's making money right now? And how can the average American ride this wave instead of just getting wiped out? So, as always, let's follow the money. When rates drop, the first to benefit are big investors who load up during the dip, real estate moguls who borrow big at low rates, and banks and funds that reposition early. So even political power players benefit. Rate cuts can inflate assets, they can boost confidence, and even create the illusion of an economic recovery without doing anything at all. And if you're someone who thrives on debt fueled growth, like, say, Trump, well, then rate cuts mean expansion, stimulus, and cheap capital, all music to your ears. So the question is this strategic or reckless? Well, that's the $1 million question. Is this just another example of Trump being unpredictable, or is it a calculated move? Well, economists like Mohammed El Erian and Larry Summers have said market psychology is being manipulated more than ever. When you control the narrative, you also control investor behavior. So if the market is a living organism and Trump knows how to inject fear into it, he could essentially manufacture conditions that force institutions like the Fed to do exactly what he wants without lifting a single finger. So the question becomes, what can the average person do? So let's talk solutions because I'm all about solutions. So if you think this market chaos is a strategy, not a glitch, how can you protect yourself? Well, here are 4 smart moves. Now, number 1, stay calm during sell offs. Don't get baited into panic selling. Number 2, watch the Fed calendar. If rate cuts happen, growth assets like tech, real estate, and crypto, well, they usually surge forward. Number 3, position early. Buy strong companies during the dips. Look at recession resistant stocks like utilities, healthcare, and consumer staples. And number 4, learn options or inverse ETFs if things go south fast. More importantly, educate yourself because the people who win during volatility aren't always the richest. They're the ones who read the playbook. So, is Trump crashing the stock market on purpose? Maybe not to destroy it, but to trigger the response that he's looking for from the Fed. Because once the panic sets in, the Fed really has only 2 choices. Number 1, stay firm and risk collapse, or number 2, cut rates and hand Trump the financial conditions that he thrives in. And if that's the game, you've only got 2 options: be scared or be strategic. So if you're not subscribed, now's the time to do it. Smash that like button, drop a comment with your take. Is this chaos real, or is someone playing 4D chess behind the curtain? So this is Steve pulling back that curtain on money and power. Stay sharp, stay skeptical, and I'll see you guys in the next one.